Hey guys, my name is Gladden, and in this video I'm going to discuss how you can check the quarterly financial results of any company. So if you are new to investing or if you are learning more about investing in the stock market, you have come to the right place. Let's get started. Now, the traditional way to do this is by going to the official website of the company and looking at the financial statements. But I will show you an easier method to do this, by which even beginners can very easily look at the financial figures and find out if the company is worth investing or not. So I'm going to use this website called screener.in. It is a website for stock analysis and screening, and I have been using it for several years now, and it is very useful. Now, your first step is to go to this website called screener.in. And once you land on the home page, you will see a search box here where you can search for the company that you want to analyze. So say, for example, I'll be explaining about Reliance Industries. So I go to Reliance Industries, and once you land on this page, you will see on the navigation bar, you have multiple buttons like chart, analysis, peers, quarters. You can also access them by scrolling. So you want to go to the quarters section where you can find the quarterly results section. So just in case you don't know what quarterly results are, so your financial year starts from 1st of April and ends on 31st of March of the following year. So your year is divided into quarters, each quarter consisting of 3 months. So your quarter 1 starts on 1st of April. So April, May, June is your first quarter. July, August, September is your quarter 2. Following 3 months, your quarter 3 and your quarter 4. So your quarter 4 ends on March of 31st. So here, if you can see below the quarterly results, it is mentioned figures in crores. So all the figures of revenue, profits which are mentioned here are in crores. Having said that, it also says consolidated figures in crores, and you can switch between standalone and consolidated. So your standalone figures are the figures generated by the company by operating in itself, by operating independently. So all the revenue, profits that the company generates by operating independently are what you see in the standalone figures. And when I say consolidated, it means that the company revenue figures includes itself, including all the subsidiary companies as well. So for example, if you're talking about Reliance, there are multiple subsidiaries companies like Geo Platforms, Reliance Retail, Network 18, and multiple other subsidiary companies. So all these companies that are child companies to Reliance Industries, you also consider them, their profits, their revenues in your figures. So if you are looking at consolidated figures, it includes all your revenue and your profit figures from the parent company and all its subsidiaries as well. Now, starting with sales, your sales include all the activities of selling of your goods and services from the company to its users or its consumers. So if you're looking at figures, say from December 2018 quarter, so the company had sales of 1,56,000 crores. And if you look at the latest quarter here, you will see the company made a total sales of 1,67,000 crores. So you can see that the sales have been increasing over the last few quarters. Similarly, you have expenses as well. So your expenses includes, if you click on the plus sign, you will see material cost, employee cost. For different companies, you can have a manufacturing cost as well. Now, of the total sales of 1,56,000, the company made an operating profit of 21,000, which is 14%. So your operating profit margin here is 14%. So usually a high profit margin is considered good, and also an increasing operating profit margin is considered good for a company. Next, we have other income. Now, any additional income that a company makes other than its main core business is what you call other income. So, for example, additional income through rent or through royalties or sale of capital assets that company owns. Any additional income other than its main business that a company makes is coined under other income. So, you can see here uh, the company made other income of 2,484 crores in December 2018, and in the latest quarter, it has had an additional income of 4,263 crores. So this is simply additional income that the company makes apart from its main core business. Okay. So next is interest. So even companies borrow money from banks, take loans from banks or other financial institutions, and they have to pay interest on their borrowings. So the interest column shows how much the company is paying as interest towards their borrowings. Also, if you can see that the interests are increasing, it means it is an indication that the company is borrowing more money or taking more loans. Then next you have depreciation. So what does depreciation exactly mean? So any company that owns any fixed assets, if those assets are losing its value over time, for example, if a company is owning some machinery or equipments and those equipments are losing its value over time due to wear and tear or say change in technology, the value of those assets will reduce, right? For example, if the life expectancy of a machine is 10 years, so the value of that machine in the first year and the value of the machine in the fifth year is not exactly the same. So the value depreciates, and that is what we coin as depreciation in accounting terms. Next, we have profit before tax. So initially we had looked at operating profit. Then we also saw that the company can have an additional income. So if you add the additional other income to your operating profit and reduce your deduct your interest paid and depreciation, the figure that you will get is your profit before tax. Because now you have considered all of these terms, but you have still not considered tax. So now the figure that you get is profit before tax. Okay, so the company here you can see it had an operating profit of 21,000, but you can see that the profit before tax is 14,445. Next, you have tax percent. So whatever profit the company makes, it has to pay certain amount of tax to the government, right? So depending on the corporate tax rates and depending on which business the company is into, it has to pay a certain amount of tax. So here if you see the tax rate for the that particular quarter was 28%. So if you deduct 28% from 14,445, you will get your net profit, which is 10,250. Now your net profit is a very important factor. Why? Because this is what the company actually makes when you have considered all the expenses, your interest, depreciation, and your tax percentage. Now what the company makes finally is your net profit. So this is a very important factor that you should consider. Okay, next you have EPS. Now, what is EPS? EPS stands for earning per share. Now, how do you calculate this? So when you divide the net profit with your total number of outstanding shares, you get EPS. Okay, let me simplify this. So here, if you can see, the net profit was 10,250 crores. Now, when you divide it by the total number of outstanding shares, which is the total shares issued by the company. For example, I own 10 shares, you own 100 shares, someone else own 1,000 shares. When you combine all this total number of outstanding shares, and when you divide the net profit by the total number of outstanding shares, you will get a figure, right? That is called as EPS. Now a higher EPS is obviously considered a good sign. Why? Because your EPS is dependent on your net profit. So here you can see that your net profit has grown from 10,250 to 13,680, right? So the net profit has grown, and because your EPS depends on your net profit, so it has grown from 15.16 to 21 as well. So your EPS suggests higher EPS, or increasing EPS suggests that the net profit of the company is growing. Then you have an additional section of the raw PDF. So if you wish to view the official PDF issued by BSE India, then you can click on that PDF symbol, and then you get a detailed PDF of the financial results of the company. So you can see the same information has been put officially, and you will see a lot of more details as well here. So yeah, and if you wish to traditionally view the results issued by Reliance, then you can just go to Google and search Reliance Q2 results 2021, and then go on the official link, and you should get the official results. So yeah, here if you click on the quarterly result section, you will get the official PDF issued by the company itself. Now this is a very in-depth a document. It consists of 51 pages, and if you are seriously willing to invest in any company, then I do read the documents. But if I just want to have a glimpse of the company and how the company is performing, how the financial figures have been going, then I quickly come and take a glimpse on screener.in. And then additionally, if you are really willing to, or serious about investing in the company, then you can go and read the detailed report, and you can also check out other financial statements and annual reports of the company before you invest. So let's quickly summarize what we discussed just now. So starting with the sales, sales include all the activities of selling of goods and services. So this figure will tell you the total sales that the company made in that particular quarter. Then you have the expenses. So expenses include all the expenditure of the company, and when you deduct the expenditure from your total sales, what you get is called your operating profit. Then when you compare your operating profit with your total sales, you get a certain percentage which is called as operating profit margin. Higher the operating profit margin, better for the company. Then you have other income. As I said, this is all the income generated by the company apart from its core main business. Then you have the interest. So company has to pay a certain borrowings, certain interest on its borrowings and loans. That is what you call interest. Then you have depreciation. So all the fixed assets that a company owns, if it loses value over time, you got to consider that, and that is what we call depreciation. Then you have profit before tax. So here you can see 19,000 crores is what company made as profit before tax. When you deduct the tax, what is left is what you call net profit. Net profit is a very important factor that we need to consider. And when you divide your net profit with your total outstanding shares, what you get is your EPS, and higher the EPS, better it is for the company and your investors. So now say you want to do the same analysis for some other company, you can just search, say for example, TCS. So if I click on TCS, I get the details. I click on quarters, I get the quarterly results. Similarly, again, you can see the sales numbers, expenses. So here you can see the sales have grown from 37,000 to 46,000 crores. The operating profit has gone from 10,000 to 13,000. Your net profit has gone up from 8,000 crores to 9,600 crores, and your EPS has also gone up from 21.6 to 26.02, which indicates that the company is doing pretty well. Uh, Similarly, you can check out the same for other companies as well. And I hope you found this video helpful. If you liked the video, make sure you hit the like button, and please make sure you subscribe and press the bell icon so that every time I upload a new video, you get notified. I promise to deliver at least 10 useful videos this month itself. So make sure you subscribe and hit the bell icon. It means a lot to me. Thanks a lot for watching. Bye bye.